Good morning, everyone. I'm your host, Anne-Marie Band. Welcome to the Daily Edge on the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group's event contracts to trade indices, energies, metals, and now Bitcoin. Today's broadcast is brought to you by Trade which has a built-in custom app dedicated to trading CME Group's event contracts. You can trade them on the custom app or using the Dome on the main platform. Welcome after the long weekend, folks. I am excited to be here. I've got an amazing guest. I had so much fun talking to him. But first, I want to send you all to our Place Your Trades dashboard, which we come to every day. You can come in, and JJ and I are going to be starting to talk in just a little bit, but there's a general chat for folks to come in, and we've got some amazing quant stats. We've got an overnight review from Tracy Schuchart, which is absolutely useful, tells us everything that's been going on in the overnight and across the pond, which JJ is joining us from London today, so it's nighttime for him already. But here we have profitability factors that tell you whether the charts are likely, statistically speaking, if they're going to close above their open. And we have it for the ES, the NQ, the YM, tons and tons of data for you. And coming down to our absolutely magnificent tool brought to us from Quick Strike, we talk about these contracts. And today we're looking at the 4210 contract that is being priced, and you can see where these buyers and sellers are stepping in and placing positions, right? So on with the show, I want to introduce to you JJ, who is Vwaptrader1 on Twitter. Gotta follow him. JJ, welcome.
Thank you so much for having me, Anne-Marie. I really appreciate it.
It's my pleasure. I have loved learning about you. You've got a really magnificent background because you have a ton of life experience that takes you all through the early stages and at the Vancouver Stock Exchange. And everyone can hear that lovely Canadian accent coming up. But tell us about you, JJ. How'd you get into the crazy business of trading?
Boy, I completely took a non-traditional route to get to where I am, and I'm lucky enough that I started in the 90s. Before the internet, before social media, back when you had to go and buy people drinks to make contacts and do all those kinds of things. I was working. I was I was working making shampoo and things like that as an organic chemist assistant in Richmond, and I was working in Richmond, BC. And at night, I would work at this nightclub, this crazy nightclub in downtown Vancouver, and as a bouncer, which I had done while going to university. And when we got out of university, three of my friends, we all moved to Vancouver, and I was working in this club, and it happened to be a club that a lot of pretty girls went to. So the traders from the VSE naturally, they move like a school of fish, and they'll follow pretty girls anywhere through the city. Those guys, right? They have disposable income. They're young and generally out of their minds half of the time. So they used to come to our club, and this club was it was a dark black hole, and the music was so loud you had to wear earplugs. And the girls liked it because it was dark, and the guys couldn't really bug them so much. So, and of course, next door to us was a how shall I say this in a polite manner, a gentleman's club, where those girls would come after that place closed, and they'd come to dance. And so, of course, traders, you know what male traders are like. You've been around.
Savages.
They're animals, right? And so these guys used to come in. One night, it was a slow night. I was sitting out there. I was reading a book, and they were just shocked that a bouncer could read. Because anyone who weighs over 275 pounds who can read a book, they're just like, oh my God, you can read. And one of the traders bought me a book called Liar's Poker because I'd used these guys, and I was hooked. It was at a crossroads in my life. I was a failed microbiology student. My parents wanted me to go to med school. I did not have the brains nor the ambition to get into med school, and nor did I have the stomach for it either. So I was trying to figure out what I wanted to be. I read Liar's Poker, and I was like, "This is it. This is the environment. This is, everything's different every day." And New York was the epicenter of everything. Now Vancouver had a huge mining, um, town, and we had thousands of little public companies on the Vancouver Exchange. And so I started, trying to get into that line of work. And I read in Market Wizards, I read an interview with Linda Ratchke, and she said how she got a job close to the exchange so she could meet people. So I did the same. I went and got a government job because I speak French. And so I was working for the federal government at unemployment insurance. And the office was in a building where there were a bunch of boiler rooms, right? Phone rooms for Vancouver promoters. And that's how I got my first job. The very first guy who gave me a job was this little East Indian guy who wore cowboy boots with a suit. He was about 5'2", drove a black Rolls Royce, and his assistant was this 6 foot tall blonde lady. So they looked like Boris and Natasha from Bullwinkle, right? They literally looked like that. And he was my first boss, and he got me in the industry, and he helped me get my first job um, at the company that made the leads that I used to. I was what they call a phone chimp. So after my government job, I'd go up to his place, call people who had sent in expressions of interest on his mining company. They had some piece of moose pasture up in Nova Scotia or something where they said there was gold, and they were raising money to mine it, and the stock was actively traded. And so he taught me the business, and he taught me what to expect when I get onto a trade desk. And he got me a job at the company that made the leads, and back then it was direct mail advertising. This is before the internet. So I stepped into this company, and I had a couple of hundred clients that were either public companies or people who financed public companies and who held stock. They needed the leads to have their phone guys work so they could get them out of their investment, right? The old fashioned way, right? So that's how I learned the business. And so when I finally weaseled my way onto a brokerage firm desk, the reason was one of my friends from Saskatchewan, where I grew up, was dating the head trader of this firm. And he was an older guy. And one day they invited me out to dinner with them, and I just kept bugging him with so many questions, And one day he called me up, and he goes, Joey, you want a job? We got an opening, right? So I went to interview with the firm, and they were like, well, you don't know how to trade. I go, yeah, but I got 200 clients who'll do nothing but sell stock, and we can charge them 3 to 5% commission, right? Which is pretty decent.
That's a lot.
When you're
Yeah.
selling $4 million worth of stock, 3 to 5% commission is pretty decent on those trades. So you're hired. Just don't get us into trouble. And that's how it started. And one of my clients was this little East Indian guy who I called the Penguin, who had made $400 million on Breex Minerals, which was a huge mining scandal, which wiped out the Canadian junior mining market. Stock went from 30 cents to $200 on the New York Stock Exchange. And they made a movie about it, Gold, with Matthew McConaughey. But the real story happened in Alberta, and one of my mentors wasn't an early investor. He had 5 or 7 million shares at 30 cents, and we sold that all the way up to $200 a share. So I saw someone make, 300-400 million dollars in front of me for the first time, and that was eye opening, you know. And he got me my first client, who was a Swiss bank, and that's how it started from there. And so what I would do is I was the liquidator. People would take companies public, and I would sell that stock through Canada. It would be in Switzerland or some offshore place. They would be routed through Canada into the United States. So all the market makers loved me because I was the source of supply. And
Let me interrupt you. Let me interrupt you for a second there. So one of the very interesting things that you just said really comes right back to the anchor of where your strength is, because you can actually see how order flow is created and made and pulled back. So
exactly.
talk to us a little bit about order flow and what a trader who's never had the kind of experiences that you've had, what did it teach you about how prices move in the market?
That's a great question, and it's all about supply. Right now, there are three guys in a New Jersey coffee shop scheming over a couple of napkins on how they're going to make $100 million. That is the creation moment of the order flow. Then they'll take a deal public and pay someone to promote that deal and bring investment in and bring trading in, and that creates that order flow. So that order flow is then created and then funneled into the markets, and then the retail comes. Just like Field of Dreams, if you build it, they will come. Right? If you build a market, people will come to it. And they'll transact. And that's how these guys, people who surprisingly can barely read, you'll see them worth 2, 3, $400 million because they will have done deals and they will have sold. They'll take 18 to 24 months and sell 150 million shares of stock between $1 and $2. And
Fascinating.
it's a fascinating world on the creation of markets. And I've been lucky because I've been the liquidating trader on about 200 IPOs and reverse mergers. So
That's
I was the
fascinating.
supply. Yeah.
Fascinating. So when we talk about things like liquidation and we look at things like order flow, let's fast forward a little bit to where you are now in the retail space. You run a magnificent room called Micro Futures, and it's part of a larger group. Tell us a little bit about that group, what it is that you share with them day to
Sure.
day, and then we'll jump right into some charts.
Well, my partner Steve and I got to know each other through Twitter. I started posting charts on Twitter because it was a cheap way for me to have a trade journal. And then people started following me. Steve reached out, and he was from Port Jefferson, Long Island, where my best friend and business partner was from. And so I immediately connected because I've been doing business with New Yorkers for my whole business life. So we immediately connected, and that's what we grew the room. And the whole thing was to teach people how to take sort of the blinders off, how to take the blindfold off and actually see a market properly for what it is, take that mystery out of it, and teach people how to actually make a living trading it. And it's been tough because I'm not a natural educator. I had to learn how to teach. So that's been 3 years and of 10 years of learning the markets, in the last 3-4 years really trying to be able to explain things in a fashion that somebody who hasn't sat on a trade desk will understand.
Well, you do an amazing job of it. You really,
Thank
really
you.
do. I really like this notion that you have. You have a wonderful process that you come from, and it's see, test, and execute. And this notion of combining order flow, seeing where liquidity is at, and how to move in the market according to these balances that get created. So what I want to do is pop on a chart, and I want to
Sure.
take you to the Tradeovate platform. And so right here, we're looking at it. I've made normally you do micro balances and you make them larger, but I wanted to start with the hourly, and I drew some boxes for ranges that talk about things. So describe what a balance environment is like and what traders do in that balance that can help
Sure.
us see where price is going and where it's been.
Well, the one thing that these markets that we have for the last few years anyway have been momentum based trading money markets, where you look at the large firms, and they have their Microsoft and Amazon and Apple positions. They've got billions of shares, and they acquired them a long time ago. So that stock is kind of put away. The markets have these huge ranges because we have momentum traders pushing inventory back and forth. So the balance zones, which Jim Dalton and Stadelmeyer and those profile guys came up with, they came up with them, but they didn't really put it into like simple English for us. So that took me 10 years to figure
For sure.
out, right? They're brilliant people, right? And they just expect you to know, and that's cool. But for the rest of us schlubs, it took me a while to figure out how to actually explain this and then execute on it. And what these balance zones are is that initial balance zone that you see to the left-hand side of your chart, that is an accumulation balance, right? Then supply gets shut off and then we go to distribute. That's why when the market comes back down, it comes right back into that balance zone. It might look below it, but it comes right back up into it because it's cost basis. Balance zones are basically cost basis. And for some reason, cost basis isn't really spoken about these days. You don't hear about it on Twitter. You don't, nobody really talks about it. The reason I know about it is because when you take a company public, you issue yourself the stock at 0.0001 cent, right? That's how a lot of these microcap companies, the stock is issued to the insiders at a tenth or a hundredth of a penny. So if you're selling it, if you have that, that's almost a zero cost basis. It's almost free, right? And
Mhm.
that cost basis determines where you can sell it at profit. So in these markets, and we have to remember that it's a market. That's why it's called the stock market, futures market, because it's a market, whether we're selling rugs or spices or carpets or tomatoes, this is basically a sales chart. Like in those old
Yeah,
80s movies, the guys, in the stuffed suits, they were sitting around the boardroom table and they had an easel with a sales chart, right? It's
right.
basically all we're doing. Here, we're just selling contracts or stock, right?
So could we use the VWAP to approximate that cost basis? I hear you talk a
Oh,
little bit
yeah.
about that.
Yeah.
So our VWAP is right here on this edge. And
Yep.
so I love that you use that VWAP to help us realize, hey, listen, this is about where your cost is and where the buying and selling is from
Exactly.
that perspective. Talk to us a little bit about this notion of see, test, and execute. And so, what I'm going to
Okay.
try to do, I'm going to put it on a 5 minute for where it breaks,
Okay.
going from out of one balance area into another and then breaking down. Talk to us a little bit about your notion of see, test, execute. I
Sure.
love that. And I'd never heard it before I started listening to you.
I this came about, this see, test, and execute and process um, was a way for me to enforce personal discipline. Because before I was a retail trader, I had no personal discipline. Because institutional traders, when you control the order flow, if you want the price to go up, you just stop selling, right? Or if
Yeah.
you want to push price down, you offer out a million shares and knock out all the bids. So you could have the luxury of these things. Retail, you can't do that. Retail trading is the hardest thing I've ever had to do because you can't cheat, right? There is no way to cheat at retail trading. Trust me, if there was a way, I would have found it, right? Because I am that kind of a person. I will always try and take
Shortcuts.
lazy. I'm always that kid. I was that lazy kid who always tried to take the shortcut, right? And so I couldn't do that here. So I was like, how am I going to be, and I was failing miserably when I started retail trading. Couldn't trade my way out of a wet paper bag, yet I've squeezed stocks from 30 cents to $300, right, by myself. But doing this required discipline and process. And that's where Steve came in and he started talking about it. So I thought, what if we can develop a process that retail traders can use because they don't have the support system of compliance officers and credit officers and owners of firms and all those things. They're in the room by themselves and they don't have any support system. So if we can give them a process, we can give them a support system like they were working at a firm, right? So we have a process to see the market. We have a process to come up with these little micro balance zones for day traders and larger traders too, if you want to use a swing time frame. Then we have a process to test it. And this is where the CME and the micro contract have been a godsend because that micro contract allows you to take a few test trades without bankrupting yourself. You lose 20 or $30 if they don't work out. And that tells you whether you're trading too early, whether you're not seeing something, whether it really, I use getting stopped out as an educational process. I find
Excellent.
stops are a wonderful thing because one, they insure your account. and two, they give you information about yourself and the market. So you're getting three things for the price of one. Now, a stop is a business expense for me. And as a
Yeah.
smart business operator, you want to keep your expenses tight. Like when Ace Greenberg told the employees at Bear Stearns to reuse paper clips, right? This is
No.
that's a true story, right? Right? They were making hundreds of millions of dollars, but he was like, "Hey, hey, 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 don't throw away those paper clips." Right? Bottom line, you got to keep those expenses reined in.
So, for instance, let's say you're thinking that the chart is going to break down,
Hmm.
right? But you don't know particularly. Let's just say you're looking at this spot right
Yep.
here and you think it's
Yep.
going to break in some of these lower levels.
Yep.
How do you position for that test? What
What
does the
I
test tell you when it wins and when it doesn't?
what I do is we have a system of trading called the look below, balance and fail, and the look below and go. So in that first instance, when we put in that high just to your left and then came down and put in that low, that was a
This
look
high?
above balance. Yeah. And then we came
Mhm.
down and tested the bottom of balance, looked below it, and came back up. And you'll see we went right to the top of it.
Yes.
Right. So that's when we position. Now, when I first started trading, I would screw up and take the look below and then get stopped out, and then it would turn and go. Then I learned that that's where people are like, you got to be patient. You got to be patient. But why do you have to be patient? You have to be patient because you want to allow those large traders to sort out that level, right? It's like when you go to dinner with a friend who's just made $100 million. When the check comes, you get alligator arms. You let him reach for the check, right?
I got to go to the
So,
bathroom.
right, exactly. That's the Vancouver way, right? He just made a lot of money. Let him pick up the bill. You just quietly slink away and come back after the bill's been paid. And that's the exact thing that we're doing on that look below and fail. You let those large traders reach for their wallet, and then when it re-enters that balance, that's when you want to start taking the long after it's cleaned out those sellers at that level, right?
Excellent.
But
Excellent.
yeah, we don't want to be the first one to reach for our wallets, right?
Very good. So through this passage, going from someone who was actually uh, in charge of that order flow, seeing when things would be released, knowing when they need to be released,
Mm-hmm.
and all of that, and then moving to this space that's quite a bit more opaque. So you have to look
Oh
for
yeah,
different signals.
exactly.
What was the toughest part of moving from a a trader like you were
Mm-hmm.
to the trader in the retail space today? What sorts of
Um,
things do you find yourself, or did you find yourself having to relearn because you couldn't see behind the
the
curtain?
it was one of the most humbling experiences I've ever had. When clients would literally fly me out to New York for a weekend just to get my advice, kind of thing. And so you go from that, once I saved a large margin call for a brokerage firm by doing a few quick things in a market, and you're getting a standing ovation because they avoided a $50 million margin call because of your operations in the market that day. You go from that to not being able to trade one mini contract, and I'm cheap, so I'd lose $100, $200, and it was just devastating. I was like, oh my god, I mean, I can't do this. And that was the hardest thing to admit, that you really don't know what you're doing and to watch. And that was the thing, because you feel like you're not doing anything because you're not making any money, but you have to educate yourself, just like a surgeon has to educate themselves on,
Right.
doing a mitral valve replacement. They just don't let, a first year med student do that, because they're going to, they might start cutting at the angles instead of the rib cage, so it's just, you've got to, and the patience part and the discipline that comes from journaling. And I mean, my god, I mean, I basically traded for wise guys and with a bunch of wise guys. If they saw me journaling, what are you doing, writing poetry? Like, what's wrong with you? Come on, we're going to the
Right.
bar. Right. So all of
Right.
that was new to me. The discipline aspect was something that I had never ever encountered. right? Because it was easy. You sell 5 million shares of stock and then you go have a steak, right? I mean, what's the
Right.
big deal, right? You need 50 grand for the weekend, sell some stock, right? This was, oh my goodness, the amount. That's why I have a lot of respect for people who trade retail and do it well, because they go through an anguishing process of, where you're wondering whether your self-worth gets questioned and all of this. So that's why I like to came up with this process where we have like a 5-step process. And once you discover that process and build your trade, basically a trade setup is a repeatable business practice that happens because of either like supply is introduced or supply gets taken away, right? So that repeatable business process is what we want to just focus on. So it keeps us from, hey, is my trade happening? No, I don't see it. Well, then I'm not going to stress out, right? I'm not going to beat myself up if the market moves this way or that way and I miss it, because it's not my setup. And what I like to do is teach new traders or ones who aren't consistent one good trade, like that look below and fail, because it's based on the oldest business principle of
Yeah.
supply running out,
I
right?
love that. Yeah,
You
I
know,
love that.
and once you get that confidence, then you can start short selling, because when you learn how to go long and you learn where to get out of your long position, that's usually where you're going to initiate a short position.
Right.
So learning
Right.
to go long can teach you how to go short. Short selling is hard because the sellers always hide their agenda, right? Like I can come into a market, I can come into any market in a stock, and I can sell 5 million shares into that market and nobody will even know that I existed, right?
Gotcha.
That's real
Yeah.
trading. Like I'll look at the dollar volume, it traded $20 million worth of stock. My clients have a position. My job is to come in and liquidate 55 to 10 million of that, right? So to
Yeah.
capture the buying, to be able to work the bid and ask, to capture those buy orders, right? To make sure that I'm a net seller, right?
Yeah.
And so sometimes I'll have to buy the market to hold it up, and then trap shorts to make more buyers come so I could sell more to them. All of those things are, things that,
Fascinating.
yeah,
Levers that you're pulling that a
exactly.
lot of us that are from the retail space don't really even know those levers are getting pulled. So
Yeah.
it's absolutely fantastic to hear that. If you wanted to give a, a retail trader an edge and say, hey, listen, the key event here is to be more disciplined and to be more patient. And we can
Mhm.
tell that to traders. And of course, we see a lot of times that they don't.
Exactly.
What would you urge them? What would you urge them to do? What would you urge them to
Um,
say?
Basically come onto my Zooms and spend some time, right?
Yeah, you also
Spend
have
some,
a Twitter Spaces too that
yeah,
folks can hear about it
yeah.
and
And
see.
yeah, sorry.
No,
Yeah.
no, go ahead.
I like to show people. And when you
Yeah,
show people how it can be done, at first they're like, what the hell is this guy talking about? Because I'm talking about supply and demand and very, very simple concepts. Because for me, trading, and this sounds a bit rude, trading is like a street fight. When you get in there and start executing, you can't really be thinking too much about, it'd be like, okay, is the level of trajectory of this punch and the, what kind of momentum, you really need to get in there and react. So you need to have a clear head. So if your analysis is simple, then you can focus on execution, right? Like for me,
yeah.
if I'm thinking about 20 or 30 different things, I can't make up my mind what to do. Should I go long? Should I go short? And so this process kind of drills all of that out. And then we understand, like right now, we just looked below 42.11 and 3/4,
Mm-hmm.
right, for about 5 minutes and failed and came back up over it. So that'd be a 42.22 long up to about 20, sorry,
Yeah, let's look
42.12
at the
long up to,
chart. Yeah,
yeah,
let's look at that chart one more time,
sure.
Savannah. Yes, there we go. We can see the look below and
Yeah,
fail that
yeah,
we're talking about. And
yeah,
then as we crossed over all of this selling right here, they
yeah,
just flooded it and moved back to the next base, which should put us
yeah,
up into this area. And you can see from the event contract, this number at 42.10 is really actively being traded. And our dome shows it at 14 with a maximum gain of 20. But when we first were talking and had
really
it
cool.
down here,
Yeah.
it actually was closer to about $10. So we've actually watched it move up $4 just in the time that we've been here. JJ, this has been an amazing chat. I'll have to have you back to dig in a little bit more. To me, it's such fascinating stuff. Folks, you can find JJ on Twitter at Vwaptrader1, and you can also find him on his micro futures room there. And folks, I love this sort of stuff. One, because I came up on the retail side and I have no idea about all the kinds of things, all the kinds of levers that can get pulled and pushed in the space. And talking to JJ has really opened that up. JJ, thank you so much. And folks, thanks for coming in and watching the Daily Edge. And I'll see you next time.
Thank you.